Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 22nd of November today, 2021, about 8 p.m. So 2 hours until NY Open. It's currently Monday. So I'll be analyzing our major currency pairs. I'll be looking at gold and our global equity markets and looking at what macroeconomic data is going to be released. Once you do that, go back to the chart and map out potential trade ideas with the fundamental and technical confirmed. So firstly, just looking at the calendar. First we've got the US. We don't really have much data coming out today except for Chicago Fed National Activity Index along with home sales data. And sorry, that's on Tuesday. So there's nothing being released on Monday. And on Wednesday we do have preliminary PMI numbers. Just keep in mind that preliminary PMI numbers will be released across our major economies, as they are always released at the same time generally. Next thing, we do have Chicago Fed Manufacturing Index on Wednesday, and we do have President Biden speaking as well, so we should definitely see some volatility to the dollar and the equity markets. Okay, so moving on, Thursday is going to be a very big day. We do have GDP, trade balance, and personal consumption expenditure numbers. So that being said, first we've got durable goods orders, wholesale inventories, good trade balance. We do have preliminary GDP numbers, personal consumption expenditure, pretty much all on Thursday. So going to be plenty of volatility on Thursday with all this data being released, and with the current data and the current Fed sentiment, and especially with the current demand we do have for goods and services and products, and with inflation being high, consumer confidence being high, more than likely we are going to see a more hawkish tone or hawkish statement from this data that's going to be released, which is going to be positive for the dollar. Obviously that is going to be great for the dollar, encourages consumer confidence, especially coming into the holiday season as well. So as we do know, retail sales, consumer confidence has been very hawkish, very well above expectations, which has shown a lot more of a expansionary state throughout the US economy. Okay, so keeping that in mind, we're having crazy inflation at the moment. I believe 6.2% year over year, and we're having retail sales appreciating as well. So we do know this inflation isn't fully artificially pumped, and we do actually know that consumers are actually buying those goods and services. They're not actually being conservative with their savings. Okay, so overall, I'm expecting most of these reports to be as consensus or above market expectations. I'm not expecting anything to be too dovish, and more than likely on Thursday we're going to have so on Thursday we're going to have a major movements there, and on Friday we're pretty much getting a week with Thanksgiving Day. Okay, so moving on to UK, we do have preliminary PMI numbers. We do have the Bank of England speaking subsequently after that, and we do have the autumn forecast statement, which is pretty much the Treasury giving their forecast for the upcoming months and quarters, and what they're expecting for the budget this year. Okay, actually in the upcoming fiscal year. So moving on to Tuesday, we do have preliminary PMI numbers again, or ECB members speaking on Tuesday, and pretty much throughout the whole week we do have these ECB members speaking. We do have monetary policy meeting accounts, and we do have ECB President Lagarde speaking as well. Okay, so moving on to Japan, we do have Thanksgiving Day on Tuesday, and on Friday we do have CPI numbers being released. Moving on to Canada, we've only got Bank of Canada member speaking on Wednesday. Moving on to Australia and China, we did have the Bank of China interest rate decision. Everything was status quo as expected, and I believe we did have a bit of volatility we did see the Australian dollar start to spike up subsequently to this statement. So, and then tomorrow on Tuesday we do have more PMI numbers being released, and we do have RBA member Bullock speaking, and to end the week on Friday we do have retail sales, and I do know that wage inflation and CPI is appreciating month over month, and with retail sales that is going to give us a bit more consumer, that's going to give us like a strong sentiment to see if the Australian economy is expanding month over month, and understanding whether I guess the consumers aren't being too conservative. But with wage inflation and general inflation appreciating month on month, more than likely retail sales will appreciate, but this will be a key consumer confidence indicator. Alright, so we understand what macroeconomic data is going to be released. So going to the charts, alright. Let me pull up my Epic pen. Forgot to add it. Let's let this load up. There we go. Alright, so obviously we're on the 4 hour here, and once we do zoom out, we're overall, you know, bouncing from these lows. We are in this pullback stage on this bullish structure being formed here. Obviously, our trend line has actually broken, but to me, my key level of interest is probably around these candle body lows. I think it's about 72,300, roughly at these sensitive price levels here, these previous lows here, and ideally I would actually like to see a nice candle body support at these levels here before we actually do continue and break to the upside, break above these candle bodies here. But knowing the current structure here, I would be more inclined to sells once we start to break and retest below here. That's for me to take some safer sells. And obviously we can get like a deeper pullback to take the sells here and take them further down, retest, and then push further to the downside. Okay, but I just need to break below this liquidity level at 72,300 roughly, and then target these previous lows here. Okay, so initially first target would be at 750, sorry, and then targeting these lows here. Okay, roughly just above the 71 cent mark. But we can actually zoom in here and just see price action a bit more clearly. Obviously, you know, Australian dollar has been trending, has just been showing this strong pullback structure. But ideally, what I'm pointing out is seeing if we can break below these lows here. Ideally, I wouldn't be surprised if we actually grab liquidity here and then push further to the downside, and then push further down. I believe that we are just grabbing further liquidity because I don't really have any reason to start selling the dollar based on the Fed's sentiment of scaling back their asset purchasing and hiking rates most likely by the end of next year. So I don't really have any need to go strong on the Australian dollar. Obviously, we're going to see some volatility with those preliminary PMI numbers, obviously with the RBA member speaking, and on Friday to end the week we do have retail sales as well, but the main focus will be around that PCE, trade balance, GDP numbers on Wednesday, I believe it is. Yeah, Wednesday, I believe. So yeah, that'll definitely bring some volatility to the table, but overall bearish. These are my trade ideas. Safer sells break below here, come down, or we can grab liquidity to roughly 72,800. Okay, so that's my trade ideas on the Australian dollar. Alright, moving on to the euro dollar. Okay, euro dollar, just let me zoom out and find out when we were actually this low. So roughly the last time, 12521, probably, yeah, I actually want to see if we can actually come to these previous lows here at pretty much 1.12 flat. 1.12 flat is probably a level that I'm probably going to be looking at right now. Obviously, the euro has had this massive sell-off due to high inflation and uncertainty guided from the central bank members. So obviously there's a lot of uncertainty, and I know in some countries in the European Union aren't allowing anyone that's unvaccinated to essentially do anything. So obviously that is going to cause a bit more friction with the community and the country itself, and obviously on an investor point of view, it's really going to impact the revenue and income streams of businesses, right? So essentially, if they're having these increased lockdowns, that just decreases the revenue and decreases consumer confidence and consumer spending, which overall will decrease GDP, consumer confidence, retail sales month over month. Okay, like realistically, that's what it means. You know, that's why realistically that's the main reason COVID had such a massive impact. Okay, so moving on, right? With this bearish structure, so ideally, I don't really have any reason to start buying the euro dollar. I want to see ideally retest pretty much 113 flat, 113 flat, come down here, break below these candle bodies here, move to the downside and continue back down, because to me this is just a more of a pullback structure before we actually start to push to the downside. Obviously, to me, we will get out of the structure once you actually start to break above these liquidity levels here and you essentially mirror this initial downside move. That's when you can see a lot more buyers come into the market. Once you see strong high time frame candle body closures above here. Okay, so pretty much above here. That's what you want to see to recognize more buy side liquidity in the market. But based on the current market structure and the current fundamentals behind it, I don't have any need to start going long on euro dollar. So that's my bias for euro dollar this week. So sells pretty much any risk currency I'm just shorting, because I don't really have any need to start going long. And if I'm going long, it's going to be very short term, like very short term scalps, and identifying anything on the lower time frame. Okay, so moving on to GU, so pound dollar. Obviously we can see this bearish structure starting to form here, and ideally I don't want to if I'm continuing with any buys, I don't really want to break below this little price level here at 1.34 okay, so obviously I'm still very bearish on this, because I don't really have a need to start going long on the pound based on the Fed sentiment. So ideally what I want to look for is if we can, sorry, let me do this one up again. So if we can get some candle body closures below here, won't be surprised even if we grab liquidity here, do a bit of a pullback. You know, roughly what's that? That's 1.34700. That's about 35 pips away. We can do a pullback here, and then we can push further to the downside. Okay, obviously your safer sells is once you break and retest below 1.34150, especially below these higher time frame candle body closures. And initially your first target is going to be this price over here, roughly just above 1.33500. so obviously, I mean, that's like a 50 pip move right here to the downside, and then we can take the further sells once we start to break below here, stay below here, get some nice candle body closures below here and don't break above, and then we can continue our sells. Okay, so that's what I'm saying. So what I'm saying with GU, don't really have any need to start going long on GU, because realistically we're in a strong risk off sentiment. For instance, right, little fact for everyone, in relations to safe, so obviously in times of uncertainty, fear, safe havens do appreciate. Okay, and then if there's obviously talks of central banks hiking rates, obviously, like, realistically every single central bank follows the Federal Reserve. Like, Federal Reserve will be the first one of the first major economies to start hiking rates before all the other G10 economies follow. So one thing as well, okay, you know, in the US we've had inflation at 6.2% year over year, right? So in times of high inflationary periods, the Swiss franc gets pulled. It's just like gold. Gold is very similar. It's probably more popular with gold. So in times of high inflationary periods, investors pull their money into gold, okay, to hedge against inflation. They also pull their money into the Swiss franc, as it's considered a safe haven, as it's considered a appreciating asset against, and to hedge against inflation pretty much. So that's just one key thing as well. Like, I don't trade the Swiss franc or do any analysis, but if you, I guarantee you, like, go here, right, go against the Swiss franc, like Swiss franc, yeah, Swiss franc is so bullish. Like, if I go to, let's say, let's go to Euro Swissy, quickly show you. Like, Euro Swissy is just on a massive decline, like huge decline. Why? Because the Swiss franc is appreciating. That's just an example, okay? But and then you compare it to euro dollar, and obviously the stronger pair is going to be euro. The weaker pair is going to be Euro Swiss franc, okay? So moving on, going back to GJ, sorry. Yeah, right, yeah. So going back to GJ, don't really have any need to start going long on GJ. Obviously, we've had the Japanese economy issue additional stimulus checks to fight against COVID and to stimulate the economy further. But the pound is overall weak. But even with that sentiment, obviously that is a bearish signal for the Japanese yen, because it actually increases the supply of Japanese yen. I don't really, like, realistically, I don't really have a need to start going long on GJ. Based on that, I mean, based on that catalyst, the Japanese yen should be less in favor, but considering that we are in a risk-off sentiment and we are in a high inflationary period, which is a fear state, the Japanese yen will appreciate because it is a safe haven currency. So moving on to the technicals, obviously we can see this nice candle body closure here. Ideally, what I want to see is for us to ideally retest 153.88, probably 153.900, for us to get some continuation sells to the downside. I don't really want to see any candle body closures above here, and for us to push further down. And ideally, I want to break and retest below these candle body closures here at 152.900, or pretty much 153 flat. Break below these candle body closures here, and we can definitely see previous price sensitivity around these levels, okay? So don't really have any need to start going long on GJ. I'm still anticipating further shorts. However, I will recognize a lot more buy side liquidity once we actually start to break above these highs here, okay? So yeah, so that's what I'm seeing at the moment. But I don't really have a need to start going long on GJ. But if we do see more buy orders coming to the market, more strong dovish sentiment and strong outflows out of the Japanese yen, we can definitely start to take advantage of some longs on GJ. But I'm not really seeing that with the current price action. So overall, bearish on GJ. USDCAD has been pushing strong to the upside, and we've seen outflows from oil steadily, okay? So USDCAD is actually really messy. It hasn't been giving us, you know, the clear, pretty much the clear breaks, because obviously we did have this clean push to the upside, then we did get a strong pullback. I was actually expecting like a little pullback to the previous order block high here, but overall, I mean, it's been trending all right, but it hasn't been, you know, the most cleanest moves, especially in this area here where it was a bit indecisive. So moving on, you know, adapting to price right now, I ideally want to see how we're gonna react roughly at this price level here roughly, because we do have some sensitivity here. Yeah, it's really choppy, like to be quite honest. I do want us to retest probably this little liquidity level here, so this price sensitivity here, previous order block high, retest the order block high, and then push further to the upside. Go from 126,500, target 127 roughly, and continue our bullish bias with more inflows into the dollar from the Fed sentiment, and we can see continued outflows from oil, okay, and the Canadian dollar itself. So that's what I'm seeing on Usdcad. Alright, so moving on to the dollar itself, we've been making a strong push to the upside on dollar. Ideally, with dollar itself, I want us to break and retest above 96,140 to show a lot more buy side liquidity. I won't be surprised if we actually do retest the key level, come back up, start to break above here, and then aim towards 96,500. But yeah, I don't really have any reason to start selling now. Like, to me, we're just gonna do a bit of a pullback early in the week, and then once we actually do get those hawkish data in relation to PCE, trade balance, GDP numbers, we can push to the upside, and just waiting on what volatility Joe Biden speech brings as well. So that's what I'm seeing on the dollar as well. Like, to me, we're just in a bit of a pullback structure. It's just seeing price being pushed from more favorable demand zone before we actually do start to rally up and create a new intraday high. Moving on to Japanese yen. Japanese yen is just chilling at 87 level roughly. I probably want us to get some aggressive bounces of 80 for us to continue to the upside and start to come above of these highs. And then if that does happen, we can see more, obviously see more inflows in the Japanese yen and more outflows from our risk currencies, and see, especially see GJ fall to the downside and break below that 153 level. So ideally, I don't really want to break below 87.50 because that will show me a lot more outflows from the Japanese yen. So I would want us to get some aggressive bounces here for us to continue back up and potentially up to 88.50. So, alright, quickly moving on to gold. Alright, so moving on to gold, we're definitely seeing a lot of buy side exhaustion roughly at these highs here, and recognizing, and we can definitely recognize a lot of sell side liquidity at these previous lows here, as we did, get a fall for a counterbody closure below here, and we actually failed to close above, showing me a lot more sells being flooded into the market too. Okay, and gold really pushing further to the downside right now after closing, well, this candle here, I mean, it's roughly got about 3.5 hours until it closes. So this is with the candle that closes during New York, and if we actually do close below here, we can actually take some further sells and take them down to roughly 1832. Yeah, roughly to 1832. So that's what I'm seeing on gold at the moment. Don't really have any need to start buying gold. So yeah, and then we can start to correct this initial downside move, but obviously we're just going to get we can, if we do start to push further to the downside and see like a clean belt on gold, 1803 would be a key level just to watch out for. But ideally, it's like 400 pips away. So ideally the main focus should be trying to get down to 1830, but wouldn't be surprised if we start to come down here, retest, and then grab liquidity and push further to the downside on gold. Alright, moving on to NAS. I haven't done an analysis on NAS in a minute, but ideally following current market structure, because like NAS, all the equity markets are so like pumped. You can blame the Federal Reserve for that, but I mean they're so artificially pumped, like it's unbelievable. So following the current market structure, I do want to get like a solid retest at 16,400, which is about 240 points away for us to retest here, see price push a more favorable demand zone and continue back up, and this will just be like a little pullback structure. Okay, so that's what I'm seeing, so I'm expecting. But yeah, we should see a big, like a fat movement during that data on Wednesday, I believe. So yeah, that's what I'm seeing. And then obviously a lot of buy side liquidity once you start to break above these daily highs here at 16,640. So that's what I'm seeing with NAS. And alright, moving on to global equities. Okay, so global equities are very hot at the moment. Obviously Dow Jones is just having a bit of a pullback structure at the moment. I'm really liking how we actually did retest these lows here, roughly at 36k. Now we just push into the downside, and probably I want to see how we react at 35,550, which will be, to me, that will be a very good buy area if we do get some strong higher time frame candle body closures above here and fail to close below. We can steadily push to the upside. As I discussed, NAS is just steadily chugging to the upside. Like I was saying, we can get a bit of a pullback, see price be pushed to a more favorable demand zone, and we can continue to the upside. China 50 is just in this high time frame consolidation area. I need to break and retest above 15,650 for us to break above this little price sensitivity area, and then initially target these highs here at 15,800. Aussie's taking a massive beating. It's just a bit of corrective structure based on the sentiment from the RBA, as they are anticipating earlier rate hikes than expected. Okay, so yeah, obviously, I mean, we've had this bit of a pullback structure, but I'd want to see how we do react at roughly 73.43. So yeah, that'll be a make or break level, but overall still very bullish on the ASX. Okay, so moving on to Japanese yen, very bullish, and now we're just steadily chugging to the upside. German 30, very bullish. We're just in this bit of a corrective structure here. If we do actually break below 16,130, we can potentially push down to 16k flat and see more buys come into the market as well. ECB is just having a pullback structure along with the 40 as well. Okay, so pretty much trade ideas have been discussed across our major currency pairs. Talked about gold, and just a brief overview. Just looking at the global equity markets, because I just like to use the global equity markets just to understand, like, just give myself like a rough macro sentiment of what's going on in these respective economies on a equity point of view. So these have been the trade ideas discussed. If you enjoyed the video, please be sure to like, share, and subscribe. Thanks.